All right, so we're just talking about some of the economic reports we're getting. We got strong retail sales yesterday. Also, at the same time, sentiment's very low. The president's trade war, his tariff policy, what is that doing when it comes to the consumer and also the investor?
Well, it was interesting that item you just mentioned, Frank, on Hermès, the French luxury goods producer, that they're going to pass on the tariff entirely to the consumer because, of course, in trade wars, exporters always have the option of absorbing protectionist tariffs into their own margin. So, yeah, the textbook result of a squeeze on consumer incomes with, of course, some parallel squeeze on margins, especially for exporters like AMD and Nvidia you're just reporting. This is textbook stuff. This is super negative. It's stagflationary, less demand, higher prices. For financial markets, it doesn't get worse, that formula.
So a pretty bad formula in your opinion. You actually believe there's a lot of parallels between this trade and tariff policy by the president and Brexit. What are the similarities? And if there are a lot of similarities there, what's the business impact? What should people here in the U.S. maybe take away from what happened with Brexit?
Sure. Well, Frank, thanks for that question. I guess for a British commentator sitting and looking at this global crisis coming off the Trump administration's import tariffs, the parallels with Brexit are really hard to resist. And now, of course, great minds think alike. This occurred to me early on in the crisis, but I'm now seeing that New York Times, Financial Times commentators have come out with the parallel as well. And some of the points, Frank, are a little bit philosophical, perhaps, for early in the morning. I remember, for example, in the British referendum campaign on Brexit, Prime Minister then David Cameron on the campaign trail said that Brexit would damage GDP. And one of the voters replied to him, well, that's your GDP, not my GDP. You know, I guess that that groups in society that have lost out from previous economic processes, they lose patience and they're up for a stop to business as usual and a structural break. But of course, the second parallel is that the economic effects of the structural break can fall particularly heavily precisely on those groups that lost out in the previous order, especially low-income groups, those people whose employment had been displaced, and so on. And that's a bitter irony which the UK has learnt. And their third irony, of course, is I remember the UK government minister saying we hold all the cards in the Brexit negotiations. Well, turns out they didn't, and the UK was a much weaker negotiating counterparty compared to the European Union in the very difficult and very protracted negotiations that followed. I mentioned protracted because that's something to keep an eye on as this unfolds. But you know what? That's all a bit philosophical. I'll end on a more forward-looking point, which I think is more concrete and perhaps more interesting for folks, and that is the present situation. Opinion polls in the UK show that the public is completely disenchanted with Brexit and regards it as a mistake, buyer's remorse, you might say.
Right.
But you know what? No one's going to reverse Brexit. The world has changed. It's irreversible, irrevocable. This is a new world we're entering into, and you know the features of it are above my pay grade to comment on. The end of the old dollar, the US dollar order, reshoring, the fragmentation and decoupling in the world.
A lot of things going on, Chris. In all fairness, I mean, we could you keep that list going for quite a bit. I wanted to just pull a little bit more on that Brexit analogy. So in this situation, it sounds like the U.S. is the U.K. But is there a Europe out there? Is there a Europe out there that basically we have a disadvantage towards? And how would you describe the dynamic between the U.S. and China right now? President Xi in China actually going around Asia, trying to rally the other Asian countries to his support. I think he said something similar to, kind of, you should be closer to your Asian family right now.
Sure. I think I think it was the Chinese Foreign Minister, Frank, who said that your neighbors close to you are more important than cousins far away, meaning the United States allies in Eastern Asia in particular. But yeah, Frank, China is the answer to the question. In our analogy with Brexit, China is the counterpart to the European Union vis-a-vis the United Kingdom. China is, of course, the new peer superpower, and it has a say in this negotiation, which will be decisive. I was really interested to hear your colleague Eunice just reporting from Beijing that you can see that the China wants to try to keep trade flows going without losing its negotiating position or losing face. Those chips which are have local content, which coming from US firms with local content in Asia. I think that's really significant. And I guess that the only way out is for off-ramps which involve objective climb downs, but which go with the grain. Not only save face, but go with the grain. I'll tell you what I mean. That China, in any case, had switched its macroeconomic policy because its dependence on the external demand was already weakening its own domestic economy. It was already moving to boost domestic demand. So if you just go with that grain, then you can find an accommodation with the US. And I think that's got to be the way to go.